Liz Lappin, welcome to the podcast.
Thanks so much for having me.
So tell us about common good mining. It's an amazing idea. I can't wait for the audience to hear about it.
Well, thank you. So, Common Good Mining is a technology and resource startup. We've been around for about 12 months. We're focused on something that we call modular mining. And maybe I'll stop and explain why, or, the rationale behind the company before I explain what that is. So, we're really driven by the fact that we need critical minerals now more than ever for energy transition. So, if you're looking at an electric vehicle battery or you're looking at a wind turbine, there's metals like nickel and copper and zinc that are required to bring those technologies to life. So there's this inextricable link between climate action and decarbonization and the metals and mining the metals that we require for that. And year after year, the analysts are predicting that we're not going to have enough to complete our decarbonization or our energy transition. And being in the natural resources sector, we've spent a lot of time at Common Good Mining thinking about why are these shortages looming? Why don't we have enough? And the conclusion we've come to is that it's two main things. One is that it takes a really long time to develop a mine. It's on average 17 years from discovery to production around the world. So it's really slow. That's because most large dominant mines are extremely large capital projects. There's a lot of risks to address. And the way the industry is set up, you have, nucleating of projects in the exploration phase over, many field seasons and many capital raises on the TSX Venture Exchange or similar ones around the world. And that takes a lot of time, right? It takes time to build up those projects and then ultimately get them into production. The other thing is that as a mining industry, we're not actually all that successful, right? So less than, and I feel a bit bad saying that, but because I think we're all successful as individuals and companies, but when it comes to projects, less than 1% of them are actually commercializing into a producing mine. And this is at a time that we need metals now more than ever. So that's why we come up with this business model of modular mining, which looks at the other 99% of projects and, why didn't they commercialize? Is it because they were too small? Is it because they were too socially complex? Is it because the ore body is challenging because we're looking at now as an industry lower and lower grades? And what we've said is, okay, we don't believe that a mine has to be humongous in order to be profitable. So you can do smaller scale mining or modular mining with modular equipment that comes in for a period of time, 4 or 5 years, then gets moved to the next project. You can do that within a 4 or 5 year time frame. You're cash flowing, you're economic, you're making money. And that gives you on that or specific ore body, no matter what size it is, essentially a pilot. And there will be a percentage of modular mines that through the development of the ore body, we realize, it's actually double the size or it's 10 times the size. And maybe the grade that you start with on the pilot is the highest grade. And so then it's more straightforward. There's less waste. That's how you make the economics of a small scale mine go around. But then what you have through this pilot is all of this information. You have info about your ore body, your geochemistry, how your processing equipment works, how to be more efficient. But then you also have information on how are you working with the community? How can they contribute? How can they participate in terms of equity ownership? How's that working? How's your impact on the local wildlife? And that puts you in a position to design a much bigger project in a way more intelligent manner than you would designing something humongous, $1 billion capital project without essentially piloting it first. So this is kind of mass scale, you call it mass scale piloting, but it's just essentially how do we get more critical minerals to market faster?
Very cool. And that's a huge need, right? With all the just EVs you think about, we need a lot more of these critical minerals. But in many other industries that are important for energy transition, I believe we're going to need these minerals. And we're watching a trend called deglobalization, where it seems that more and more we need to get our supply chain in order both to reduce the CO2 footprint and then also the geopolitical challenges. So maybe in North America here, we ought to be looking at doing more mining here locally. Is that part of your plan?
Yes, absolutely. So our focus at the moment is in southern British Columbia, Canada. That's where I live and where our headquarters is, although our team is actually across Canada from Vancouver Island to Toronto, Ontario.
I wish I was on Vancouver Island.
I know it's beautiful there. So I guess it was a few years ago now, I co-founded the Battery Metals Association of Canada. And that was back when I was working in the lithium industry. It was fairly new in Alberta, and we were working together with some other players to essentially build awareness and understanding about the potential of lithium in the province. And we very quickly realized after starting that off that it's more than just lithium in a battery. There's more than just mining in a value chain, and that we had a lot of the right pieces for that in Canada and in the United States, but we just weren't really very well integrated. We just weren't, the car companies at that time weren't really talking to mines, right? We see that's a lot more commonplace now. We're seeing OEMs reach back through the value chain and working directly with miners and, on everything from supply, but also addressing ESG issues. But yeah, I definitely think that there's so much potential in North America to do natural resources in a way that actually makes communities and the world a better place. And so that's really what we're focused on at CommonGood.
Very nice. And I noticed your background from your LinkedIn page. You've been throughout the mining industry. And it was something I didn't realize when we first talked, how much background you have in mining. Maybe talk about a little of your background and how you came to this conclusion that the tiny mines or the modular mines is the better way of doing it.
Sure. So I'm a geologist by background, and my first co-op job in university was at the oil sands mines. So that was a really interesting experience. From there, when I graduated, I worked in oil and gas at a really traditional corporate group. So this was in oil sands, but also kind of more traditional natural gas and unconventional oil, things like that. From there, I expanded into geothermal. And then for 5 years, I worked on a really interesting project in Alberta, building up Alberta's lithium resources and ultimately working to kickstart that industry. So I've sort of run the spectrum between, that traditional corporate mindset and startups and building something new and building different things, looking at problems from different angles and different sides. So I decided to go back to get my MBA a couple of years ago. And the reason that I did that was that I perceived a gap, which i- no matter where you are in the natural resources sector, we tend to think about community and environment as a cost, as something that is a risk. And it's a cost center on our balance sheet. And I really started to wonder about, whether, because this pops up whether you're in a traditional sector or whether you're in a startup. I really started to wonder about those things as opportunities. And what happens if you look at the life cycle of a natural resources project and you strategically invest in those points where your business is interfacing with community and interfacing with environment, and you use those strategic investments to make yourself more efficient, more to move faster, to be more profitable. What does that look like in natural resources? And it really wasn't something that I could really count on one hand, the companies out there that are starting to think in this way. And so I did my MBA in something called social enterprise, which is really just a way of saying mission driven or purpose driven business, because I wanted to really bring that mentality into my work, into the natural resources sector, and develop projects at the nexus between natural resources, social innovation, and clean technology.
I think that's extremely important. And really, I see it as kind of the missing link to be able to do decarbonization. There's this huge trend now around degrowth. I don't know if you've seen this, but I think ultimately that's going to lead to a lot of resistance against initiatives that are supposed to help the planet, make the planet cleaner, everything that we all want. But we're a growing species. And I think if we're being honest, a lot of what the fossil fuel industry has contributed to society has resulted in a lot of positive things and positive growth. We have greater mastery, for example, over our climate as a result of the ability to use clean energy. And I just think rather than throw everything out, we should be looking at exactly what you're talking about, which is ways that we can leverage the growth engine of our economy to impact communities in a positive way. Because most communities just want to improve their economic life and maintain a good quality of living, basic goals that can be achieved with our economic growth engine. But we just haven't focused there, and we haven't had, I think, the right incentive structures in place to incentivize businesses correctly to focus on those areas.
Yeah.
So how do we bridge that gap and get not just with tiny mining, but say across the economy? How do we get businesses to sort of do the right thing? Is there a better incentive structure? Is ESG the right incentive structure? How do we make sure that it's, let's say, incentivizing the right behaviors?
That's, I think, a PhD thesis, Peter. I'll give you what, my 2 cents into it. And this, what you're asking about is a really complex problem. I think one of the pieces that I've noted is that I guess it's a mental model around you can't have purpose and profit, that one is happening at the expense of the other. And it actually doesn't matter if you're talking to a traditional capitalist crowd or you're talking in social finance. I think even in those circles, there's this, oh, we're going to take sub-market returns on this because it's a social project. And that's really you know, where I want to work is maximizing both. It's, I don't think that it's, a seesaw, right? Where you're taking one at the expense of another. I think that there's ways to think strategically and maximize your social impact and your profits. Because really, if you're working with a community and they have equity ownership of your project, your interests are aligned, right? Everybody wants to have economic development and have access to money for their own self-governance and self-determination. That goes for a local community, it goes for an individual, it goes for a family. So we all want to put food on the table and we want to grow and make our lives better. So, from that perspective, the corporate world, has things in common with a community. I think where the corporate world doesn't really spend a lot of time thinking about it is holistic well-being, right? Economic development is part of the puzzle, but holistic well-being means that, your mental health is good and that you spend time with your family and that you exercise and, you eat well and you have access to nutritious food and you're practicing, whatever the traditional things are for your culture or your religion or what have you, right? All the things that make us whole. And I don't think that corporate business is at odds with that, right? I think it can embrace that. We're seeing trends of, especially with the Great Resignation and everything, we see trends where corporations are looking at, well, how do we retain talent? Part of that is paying attention to the holistic well-being of your workforce. And I think that just extends naturally into communities. When we think about working with communities, it's this us versus them, where again, the opportunity is, okay, how do we work together? How do we acknowledge that both parties, the corporate or the project proponent, bring something to the table? The community also brings something to the table, local knowledge of the land, how to be safe on the land, traditional knowledge. And how do you put those ingredients together in a way that builds something that is better and more efficient and more profitable than it would be otherwise if you spend, because the reality is in mining and in natural resources, if you don't have the community on side, you can spend decades fighting. And I just don't know what the point of that is when you could engage early find out what your aligned interests are, and then move a project forward faster and more profitably.
That makes total sense. And we know as investment bankers, we know about multiple projects that have been large projects that have been derailed as a result of lack of community engagement. So for sure, it makes sense, and aligning interest is huge. Liz, I think it would be awesome if we could talk about a project, if we could talk through a little bit, a case study example of what you guys are working on today. I think that would be super helpful.
Sure. There's essentially two sides to our business. One side is our opportunity identification. And so that's, again, we're going back to that 99%. So we're looking at right now, focus on Southwest BC. And we not only look at geoscience and existing mineral systems, satellite information and data, but we also look at logistics. So we tend to, because we're looking at modular mining, we are expanding our purview into, what are the economics of processing this ore body? What type of tailing solution? Where these are problems that, as a geologist working at the early stage of projects, I never really would have contemplated before, right? So we tend to do this more holistic, full scale analysis, techno-economic analysis. So favorability for us will contemplate how far away the road is. If you need to build a road, it will contemplate whether there's other complementary industry active in the region, like forestry, for example. It will take a look at if the community is interested in working with a natural resources proponent and has people that would be interested in working with us on it and in the field. So it's sort of it's a comprehensive analysis. We use tools like machine learning and AI to help us do that and make better decisions and high grade the opportunities. So there's that pipeline of opportunities on one side. On the other side is how do you actually modularly mine? And so that's us taking a look at what is available off the shelf. So existing technologies, putting those together in a way that works for that specific geography and geology in a way that's economic and efficient. So there's the modular mining kit that will come in, mine for 4 or 5 years, and then maybe expand if you're scaling up, or maybe it just moves over to another project. So what we're working towards right now is our first modular mine. And right now we have our portfolio of opportunities. We've got a few standout opportunities. One of them's copper and one of them's nickel. They're both in Southwest BC. And we're talking to the community about how we build those projects with them.
Very cool. We'll have to talk offline. I know a company that uses quite a bit of nickel that maybe you could get a customer there, but copper and nickel, extremely essential materials, for sure are going to be used more in energy transition. The nickel company I'm thinking of uses nickel in batteries as backup for data centers, short power batteries. And in a lot of ways, it's much more recyclable compared with lithium ion batteries. So that's an interesting material. And then we also hear that copper is more and more going to be needed because of transmission. So we're seeing those big trends drive more demand for the materials that you're mining, but then also the deglobalization trend means that more companies are going to want to be buying these from North America. So I think you're on the forefront of really two trends, multiple trends there that just feels like this is right and it should be successful. Have you maybe talk about some of the challenges that you guys see when you try to go in and how you overcome them? I also love to hear more about your pipeline, because just on the project development standpoint, not just with mining, but across the board, investors are demanding a lot more upfront analysis. I think they really want to see the diligence. So I think there's a lot of value in a pipeline of projects where you're not sort of breaking ground and spending a lot of money before doing your homework.
Yeah. So the challenges, I think that there's always going to be challenges when it comes to natural resources project kind of across the board, right? You're going to have challenges with respect to your ore body, making sure you understand it as best as possible, making sure that you're picking the right places to develop it and drill it. making sure that there's no unforeseen issues on the processing side, making sure you have a safe tailing solution and all of that. So there's that technical due diligence that we do just like any other exploration company, mining company, junior, right? We move forward and do all of that technical work. I would say that because we are engaging earlier, maybe than the average company would in terms of community, we're very Indigenous community first. We want to engage earliest we can. So, for example, we incorporated Common in September, and the first week of October, I was sitting with a nation talking about a potential project. So, it's almost, we had to sort of laugh because we talked about something we affectionately call the half-baked plan, which, would send a lot of MBAs running and screaming for the hills because you have to have a plan, right? But you can't have so much of a plan that the community feels that they're not included. So you have to understand what it could look like and have some options and enough of a framework, and then have a conversation about, what the community needs, but also what they're capable of and what their dreams and what their vision is and how those things align. So I would say there's been a lot of learning on my part about the pace of that, the pace of trust. It takes time to develop it authentically. And so I've had to check my patience sometimes. Communities are not like corporations in that they've got a lot of things going on, right? They've got forest fires, they've got COVID outbreaks, they've got other economic development opportunities. And so they're balancing a lot of priorities. And sometimes you just have to be patient and ask how you can help to actually form that connection and that bond. So one of the phrases that was gifted to me by one of the folks I was speaking to at a community was that we have to move forward at the pace of trust or the speed of trust, which I learned later is actually a book. So,
It's not,
book.
I thought you invented that word. I was going to totally steal it. What a great phrase, pace of
So
trust. I'm going to use.
I think it's the son of the fellow who wrote Seven Habits of Highly Effective People.
Oh, okay. Yeah, Stephen
So,
Covey.
yeah. So I think it's his son that wrote the book. And it's actually, what's cool about it is it outlines the economic case for trust. That if you have trust, you'll reduce your cost and move faster. If you don't have trust, it's more expensive and you move slower. And so this directly applies in mining. There's, again, back to that kind of mental model around us versus them. There's fear around engaging. And if you get engaged too early, then there's a power dynamic. And whichever, at the end of the day, we're people, right? And we need to form connections. And I think that's just the way that I prefer actually to do business, is in relationship with people. So that's been some of the challenge, right? We have this usual challenge that any, mining junior would have. But then we also, because we're doing business a little differently, there's also been a bit of learning and insight into, what it really means to engage early with communities, boots on the ground. Yeah.
That pace of trust word, I'm going to start using it with investors because a lot of times investors are the same. They move at the pace of trust. We find that some larger institutional investors will move a little quicker, but everybody wants to work with family offices. I tell them fine, but they move a lot slower because you have to build a deep, trusting relationship in order to move forward in that way. So pace of trust definitely applies in the investing world, which gives me a nice way to where are you guys in terms of investors? And is anyone specifically that you're looking for type of investor? Is it venture capital? Is it more infrastructure investors that might be interested in reaching out?
I think I'm not looking for anybody specific, I would say. We've cast a pretty wide net. And that's because what we're doing is a little bit different. So we know that we don't fit neatly or squarely into the traditional venture model, for example. So tech focused investors that are looking for unicorns. Might not be us, but there are, no matter where you look, no matter where you go in the finance sector, you're going to find innovative thinkers. And so that's why I have purposely cast the net wide to reach lots of people and not only pitch the idea to raise money for it, but also hear the feedback, right? There's so much learning that comes from, hearing what people think about this idea. So we are actively raising, we're talking to traditional mining investors, we're talking to clean tech, we're talking to social finance people. And I think what's really interesting for me is innovating on the finance side of things. I think part of what the financing solution for common good will be is bringing together parties with different expertise. Because as much as we pitched this to social finance and clean tech folk, and they go, oh, this is really interesting, really great, love the connection to critical minerals, love the sustainability part of this, the social performance, awesome. But you know what? I don't know how to qualify a mining opportunity, right? I know how to value a tech opportunity. I don't necessarily know how to value an asset. And the asset folks are used to going big or going home, right? They're used to large capital projects, $1 billion projects, right? In the mining world, they're looking for something that's 20,000 or 40,000 tons per year of X, copper, nickel, whatever, lithium for 40 years or 20 years or what have you. So we're more looking at, a 5-year project and then scaling it. So it's just a different way of thinking about development. Agile, which really isn't what we are today in mining, but what we could be. And so there's been multiple meetings with some folks, and I think that am seeing the tide turn a little bit. This is the recognition of the connection between clean tech and mining. And so we're starting to see an openness to the folks where mining wouldn't necessarily be a qualified investment with the LP. We're starting to see that change a little bit, especially in certain jurisdictions where critical minerals are considered very strategic by the government. So that's very positive. But, overall, I have a lot of really interesting people. And I think that our financing solution might be, just as innovative as the business itself.
I can say on the positive, we're starting to see some movement in that direction. Investors are recognizing there's a huge hole in the market because ultimately decarbonization requires a physical solution. If we're going to have entrepreneurial companies in this ecosystem, we need a financing solution that has the returns and risk profile of venture, but has the physical component of asset and infra type of investors. We are seeing some movement there, and I think it's very promising to both see companies like yours and also to see investors start to recognize that. And once that really comes together, I think you're going to see an unleashing of the decarbonization for real and not just talking about it. For sure, big companies, corporates, big companies have a role to play, funding off of their balance sheets, but ultimately entrepreneurs are always going to be the innovators, the risk takers, and we've got to make sure people get funded.
Yes. And I think one of the things you said in there was really key is that it's assets. And it's a really tech hungry market out there. Everybody wants tech, and tech is super important, but we're tech enabled asset development. So majority of our cash flow will come from the ground, right? There's a later servitization model that could come from this, but we need to implement and prove success first, right? We need to do our first 1, 2, 3 projects. And then what's really cool is once we do that, even once we do one, it opens up the floodgates, right? When we talk about the pipeline, okay, well, we demonstrated this worked. It was for copper. It was this grade. Then suddenly you have this list of all these other opportunities that your modular equipment could move to, right? And all the while that we've been laying the groundwork at the speed of trust with the local communities. So you're not starting from scratch and then having to wait another, 17 years or what have you to build a mine. You've already, been moving forward all of those long lead items.
Absolutely. And returns wise, you don't have to quote a number, but I feel like the returns in mining are high, say, compared with other types of infrastructure. And I'm not sure a lot of people know that. Can you talk a little on returns?
It really ranges, to be honest with you. It ranges depending on the grade of the resource. As a sector, we are having to, the low hanging fruit is gone. So, super high grade mammoth resources, they've pretty much all been tapped. And so the large ore bodies that we see being proposed these days are, you might have had 2% or 4% before, now you have 0.5%, you have 0.1%. And getting those economies of scale up so that you can get your unit cost down is part of how you make those economics work. So the folks that say you need economies of scale in mining aren't wrong. So it's a bit different. What we're doing is we're saying, okay, for any particular ore body, regardless of its size, there's going to be sweet spots. And so we want to spend 4 or 5 years developing the best sweet of an ore body. That might be 2% gold, for example, or 1% copper. And so we spend time surgically developing that with the least amount of waste as possible. So we're not doing it, right? We're literally just going in, grabbing the best stuff, pulling it out. But again, what we're doing is a pilot, right? So you get that information about the ore body in an environment where you're cash flowing, you're making money. Our estimates really range, but it's around 40-50% rate of return for one potential modular mining, right? So really good. That's surprising, right? People go, okay, well, what's your outbox? You go, okay, well, it's actually, if you look at all in sustaining costs, it's actually lower quartile for nickel. And that even surprised me. It's because our CapEx is so low, because our bond is so low, right? So we're taking that equipment, we're moving it to another, there's no permanent infrastructure other than what the community might want. Maybe the community wants a renewable energy project, right? That stays behind, but the rest of the infrastructure moves on. And so I've seen anywhere from, 10% rate of return for the new projects up to 30 or 40%. At the end of the day, when it comes to mining, is we need the supply to get to market. You need it to be economic, whatever your investment hurdles are, right? Sometimes a little bit of money over a long amount of time is good. What we wanted to make sure with modular mining is that over that 5-year period, you're cash flowing, making money, you're paying out, you're giving your investors a nice, healthy return. And that includes, I would include community in that category, that community is investing in the project, not only potentially in equity, hopefully in equity, but also investing their time and energy in it. And so they need to see a return too.
So, bottom line, good returns. You've got a nice pipeline of project in an industry that really needs innovation badly, that is tremendously needed, benefits from many of the macro tailwinds. So we've spoken before. I really see this as a great opportunity that you and your team come across here. So before we wrap up, how can people get in touch with you? I know you're on LinkedIn, Liz Lappin on LinkedIn, and the company is Common Good Mining. Is it commongoodmining.com?
You got it.
Okay, great. Well, Liz, this has been awesome. We really look forward to the feedback that we'll get from this episode because it's not something that we hear a lot. I've never heard of this before. And I think it could potentially be a game changer for the mining industry and for the broader energy transitions. Thanks for being on.
Thanks so much for having me. It was a great conversation.